And we are live. Another cool pod today with Nick Tippmann. I was explaining to Nick that I was in a meditation session with the Priestess of Finance, which set us up pretty nice for that conversation. Nick's an angel investor right now. He's also a limited partner at GTM Funds. And I mean, an LP at a bunch of other funds that we're going to talk about today. He's also ex-CMO at Greenlight Guru, very cool company. He had an exit on that one, 8 years there. And the surprising thing is that Nick is still very young and quite successful. So I'm quite eager to interview you, Nick, today. Welcome to the pod. Can you tell us a bit more about yourself and give us a quick intro there?
Yeah, thanks, Charles. Excited to be here. Thanks for having me. And yeah, it was a great intro. I think the only thing I would add, I'm a founder, entrepreneur at heart. Like you mentioned, spent the last 8-9 years at Greenlight Guru, part of the founding team, leading marketing there. It was a vertical SaaS platform for the med device industry, help med tech companies get approved by the FDA and then keep their devices safe and effective once they get on the market. But had a fantastic ride, lots of ups and downs. Before that, was part of a co-founder, part of 3 startups that were ultimately learning experiences and didn't quite reach their potential. But yeah, for last 2.5 years or so, been doing some angel investing. You mentioned an LP and quite a few funds, or a handful now, go-to-market funds, Stage 2 Capital, Ganas Ventures, MKT1, M25. Sorry for the ones that I missed. Don't mean to leave you out, but yeah, been doing this investing thing full time for about 6 months now, and just having a lot of fun.
Right. And yes, we discussed, you and I, last time about you dropping out of school, I believe you told me, right? And starting your own venture. So both of us share that same background. I was into drop shipping. You were in eBay. So it's kind of similar, grit to a 10K. Maybe you can start with that. Tell us about your background and what you learned out of it, what you brought with you up to this day.
Yeah, for sure. Like I said, entrepreneur at heart, kind of one of those kids that grew up jumping in ponds, getting golf balls out of the pond, selling them on the side of the road, selling fake Oakleys out of my locker, getting in trouble at school, you name it. But yeah, I had an eBay business in high school where we would buy, funny enough, if you remember Guitar Heroes, I used to buy them by the pallet load from liquidation.com, drive my mom's Suburban down to a warehouse in Indianapolis and bring them back home, and then resell them on eBay, and did that for about a year or so. But I always
What was the margin on that?
Yeah, probably about 30-35% margin. This was when Guitar Heroes were super hot, and I think a lot of parents bought them for the wrong systems. All the boxes look the same, but for PS2, Xbox, whatever the Nintendo version was back then, maybe it was GameCube, I think. Yeah, the Wii. Yeah, there you go. It was the Wii. So there wasn't much wrong with them. I mean, some of them were broken and returned for a reason, but yeah, you could refurbish them and sell them either. I loved when I had the like new ones. Those had the best margins, but whether it was refurbished or used, normally came out profitable.
Dude, I'm smiling because I can relate so much, so fake Oakleys, well, I'd sell like fake Gucci shirts and stuff like that. So yeah, the ethics weren't too much there back in these days. But yeah,
I mean, you would let them know that they're fake. Like my friends at school didn't think
sometimes. Sometimes. No, like they knew. Yeah, obviously, like Gucci shirt at $30, like, and that tells a lot about human nature. Like you're wearing this shirt that is supposed to be expensive, but you pay $30 for it just to show that you have a Gucci shirt. Anyway, I had crazy margins on stuff as well. I would buy these Invicta watches, gold-plated ones, for like 65 Canadian dollars, and I'd resell them at 200. Talking about ethics again, but that was sort of an opportunity because Invicta didn't have physical stores, and people didn't know that. So yeah, made a good fortune in my 18, 19s and 20s on that one. Then Startup Accelerator MBA. That's kind of funny. Tell us about that one.
Yeah, so after that business, I shut that down to go to college. I always said I went to college to quote unquote learn how to start a real business. I'd always bought stuff cheap and sold it for more. And so studied entrepreneurship and marketing in college, and then got to my senior year and realized I knew nothing more about entrepreneurship than I did going into it. Started interviewing for these corporate jobs, and I was like, what the hell? This is not why I went to college. That was around the time that I really ran into and found tech startups, and that you could come up with an idea, build a product, raise money, and build something fast. And I was just fascinated, and it's like, this is the world that I want to live in. I actually ended up dropping out of college with just a semester to go, great grades, but was kind of living on the parents' dime for another 6 months and didn't want to go get a job. And so locked myself in my basement and read and learned everything I possibly could about startups, made it my mission to try to get into an accelerator like Techstars or Y Combinator. Did end up getting into one called the Brandery in Cincinnati, which was top 10 ranked in the country at the time. Great learning experience there. That startup didn't end up actually working out. I ended up joining one of the other teams there as their head of growth and helping them raise a $1.2 million seed round. Fantastic learning experience. That business was a little bit hard to scale. I ended up jumping ship and going back and doing something for myself and starting a media company focused on startups and entrepreneurs outside of Silicon Valley. So this was like 2012 or so. And I think really the startup world and ecosystem was really blossoming and booming. And I was in the Midwest and just saw a lot of the activity and really wanted to give a voice to these startups and entrepreneurs that weren't maybe getting the attention in the coast city, like at the coast cities. And so I did that for about 2 years. Actually, Forbes named us the conference that we host, one of the top 10 must-attend conferences for entrepreneurs in 2013. But really, after a couple of years, realized it wasn't going to be as big as TechCrunch. So ended up selling it and was kind of at a crossroads of what do I do next? Go out and venture on my own again, try to start something again, or try to partner with an experienced entrepreneur. And that's how I ended up arriving at Greenlight Guru.
Right. And a quick comment on that one. So I've been a gamer in my adolescence, and I've been the best torrent hunter on my server at World of Warcraft. And at the beginning, my brother was laughing at me, but I would test every class and I would level them up until level 10. Okay, so just to test out every class, right? And then I pick up the hunter and then I scaled it from there. So every successful entrepreneur that I know, they started by, or they have this phase, right? And like, I'm not sure if people realize, but everything that you name, it seems you did it like almost in a year. So that's quite extreme, right? And I also have this period around the same time as you. I was an exchange student in Hong Kong. I'd run an app company. I was working at this LED company. I had my marketing agency. I even had this AR startup. Plus, I had my nootropic, which was a serious business. So I had like 5 businesses, and I had to test everything before I could know what was fun, what was working, what was profitable. So yeah, you can go on with your experiences, because that's quite funny right there. And yes, the fact that you met Greenlight Guru's first, co-founder and CEO and your first angel investor, I mean, yep, that served you really well. And you were still young at that time. You were like what, 20?
21, 22. I think I met Greenlight Guru's co-founder, CEO, while I was in that 6 months of locked in the basement. The only time that I would come out was kind of go to startup events and networking, and actually met him when he was speaking at an event that I went to and asked him some tough question. Like he jokes around, says, I asked him like, what's the square root of his CAC divided by his LTV? And he was like, we'll take that offline, Sparky. And ended up following up with him, having a great conversation. He was just someone I considered a mentor over those next, call it, there was like 2.5 years of that period I was talking about in Cincinnati. So a little bit over a year. And when I sold the media company, he had just sold his health tech genomics business for many orders of magnitude more, and said he had this engineer, John Spear, that had been bugging him a long time to build this product to revolutionize the med device industry. And that's really the founding story of Greenlight Guru. And I ended up joining actually just a month or two after they started it as a marketing consultant, because I was kind of in this holding period or crossroads of not knowing what I wanted to do, but needed to have some money coming in. But after about 3 or 4 months working with the team, I realized my background running a media company actually translated very well to running a marketing organization at a B2B SaaS company. and also realized a lot of the players in the space were legacy systems that were founded in the 90s. They weren't doing any online modern digital marketing, no inbound strategy, and really saw the opportunity that we had ahead of us. And so, yeah, like you said, 8-9 years later, lots of ups and downs in between, lots of learnings. Had a pretty successful exit or transition. We brought on a capital partner with private equity back in 2020 with a $120 million round. Stayed on with the company for about 2 years or so after that, helped our CEO hire a new executive team, got to work with a fantastic team at JMI Equity, really amazing experience, but also got to interimly lead product, strategy, corporate development, and do an 8-figure deal actually out of Denmark that I was able to strategize, source, negotiate, and integrate. But that was a fantastic learning experience, but that really showed me got to work with early stage founders again, and really realized that like that's my passion and that's my core, being around founders and early stage, and maybe not so much being a leader at a large organization, which, don't get me wrong, has its own pros and cons, and was a lot of fun. But yeah, it was kind of the genesis to kind of strike out and leave and go on my own again.
It's super impressive. So for folks that, I mean, 8-figure, we're not used to think in terms of that. So that's $10 million plus deal. So one can imagine to do a $10 million deal. How much percent of folks have done that in their life? Probably 0.0000001, as much as zero that there are in that 8-figure. That's one. Two, I mean, the business, it did 100 million per year. Is that correct?
Plus, we did tens of millions in ARR. I can't share the revenue number publicly, but yeah, we raised 120 million from a private equity firm.
There you go. So that's a pretty lucrative exit. You use that money to invest in various companies. What's your thesis with all that beautiful money? How do you want to convert into one tree into a forest on Everest?
Yeah, I love it. The forest on Everest, my friend. I mean, honestly, coming from someone who didn't have money, you learn a lot when you come into kind of a windfall like that. And I love startups, but I also got to be a little prudent about it. So I got a financial advisor, and I got a diversified portfolio, and nothing too crazy, but a good chunk of that I have been able to start doing some angel investing, and really most recently in the last, call it like 2 to 3 months, have started to put a thesis together around vertical SaaS companies as well, and potentially looking at raising a VC fund around that thesis too.
And what niches are you aiming for? And do you mean vertically integrated SaaS or?
Yeah, so vertical SaaS, different than horizontal SaaS. I think the quintessential example of horizontal is like HubSpot or Salesforce. So CRM or marketing automation for every industry. It could be construction, medical, you name it, right? Whereas vertical SaaS like Greenlight Guru built a product for the medical device industry, and then continued building additional products for that same customer. So instead of getting a design control tool and then selling it to pharma and then selling it to automotive and cosmetics, we instead built a pre-market quality management system, and then a full quality management system. And then that deal that I talked about was adding clinical trial management to the platform. And you really look to expand with a single customer base rather than sell the same product to multiple customer bases.
Love it. And in what verticals are you investing? Mostly med tech, biotech, or what do you have your sights upon?
Yeah, so really more or less than an industry, I'm really investing across all industries, but there's really a thesis that some of these vertical SaaS winners like Toast and Mindbody and Shopify and Procore and Viva have figured out is that you can layer financial products on top of your SaaS, and you're 2 to 5xing your TAM. And so back when Greenlight was looking at raising our Series A in 2015, the conventional wisdom in VC land was that the TAMs were too small to support venture dollars in these vertical SaaS businesses. But what the Toast and Shopifys of the world have shown us is that there's ways to expand your TAM outside of just your initial core product. And because of that, I really see vertical SaaS really eating away at horizontal SaaS's market share over the next 5 to 10 years. And a lot of these businesses, like you think of software for dentists or software for automotive repair shops, or even like in Procore or in Greenlight's case, like many people thought Viva owned life sciences and that was the vertical SaaS winner. But life sciences and healthcare and medtech has multiple $100 million winners, multiple billion-dollar companies that can be built in these industries that you thought had too small a TAM. And so really my thesis is more around applying this vertical market or vertical strategy to legacy industries where pen and paper may still be the norm, and or legacy software that hasn't been built for kind of the modern digital age.
I have a founder I need to refer you in the car repair industries, building that in Canada, and very ambitious and young guy with, that special spark chip on the shoulder you're kind of looking for, and special background as well. How much startups do you want to invest in for the rest of this year, let's say, or you can also factor in the next year? And typically, what are your criteria to invest in these startups? If you can have a list of like 5 to 10.
Yeah, so on the personal angel side, I've been writing checks into anywhere from 20 to 30 companies a year for the last 2 to 3 years now, and built up a portfolio of about 75 personal investments. With the fund that I'm looking at raising, it's going to be an early stage fund focused on pre-seed, seed stage companies, probably looking to make 30 to 35 investments over the next 3 years. So looking to do about one deal a month or so as I put that together. Smaller checks alongside other leading investors. So call it 150 to 300K, whereas my personal checks are more like 5 to 15K.
Roger that. And what are the criterias? Are you looking, what are you looking first on the founder level and then on the product market fit side?
Yeah, so on the founder level, you named it, like you got to have that grit, you got to have that relentlessness, you got to have that chip on your shoulder. I think that comes out in many different ways. Your background, what you've done, you got to be sharp, you got to be a learner. I see your Clifton strengths on here. I mean, like that's the founder I want to invest in. Like your background, you got it right here. Ironman, retreats, adaptable, learner, achiever. That's what I'm looking for from the founder. And it helps that they've had their experience, whether it's been a success or a failure, but that they've done something, they've shown that initiative in some other ways in their life. And it might not always have to be business. It could be being doing the Ironmans like you got there. But on the company side, so the strategy, vertical SaaS, and then product market fit, looking for companies really with some traction post product. So anywhere, call it from 50K up to $1 million in ARR. And yeah, looking to scale and go big.
Love it, my dudes. Well, I'll see if I can refer you some startups. Until then, where can people find out more about you?
Yeah, absolutely. I appreciate that, Charles, and would be much appreciated. You can find me on LinkedIn, Nick Tippmann. You look up, connect with me. Would love to connect, to get more active, more and more on there. And then also on Twitter, N Tippmann, Tippman.